Bitcoin is obliterating the bears this week, punching through to over $23,000, up over 16% in the past 7 days, and over 8% in the last 24 hours. As we've been discussing on the channel, I'm bullish for crypto in 2023, while my random wild guess being that we have not seen the bottom yet. However, if we continue to see this type of price action in the weeks ahead and manage to hold strong above that $20,000 mark, we have to start considering that back on November 21st, 2022, the 15.5K price point may have been Bitcoin's bear cycle bottom. Like we explored a couple weeks ago together using the BSI or Bitcoin Strength Index indicator, one of the few technical indicators I like to reference when trying to predict long-term flips in crypto market cycles, breaking through the 20K price point flipped us into a bullish trend. You can check out this video guide about how the BSI indicator has performed historically with predicting bearish and bullish trends if you're interested by clicking on the link above. Either way, this week highlights the importance of starting to pay closer attention to what's happening in the cryptocurrency markets as investors and become more flexible in where we stand short term, whether we are bearish or bullish. Because taking a hard stand one way or another can cause us to miss important once-in-a-lifetime opportunities in these crazy, unprecedented times. Although we small retail investors can't really have a meaningful effect on Bitcoin's price, we must understand how meaningful trends are in the market and remember that the trend is our friend. Looking back at the Bitcoin price chart, the BSI indicated the start of a red bearish downtrend November 21st, 2021, which lasted until it flipped to green bullish uptrend last week. Sweet. Whether we have finally flipped to bullish or if this is just an epic bear rally bull trap, we have both tailwinds and headwinds ahead of us. So let's explore them together. Hello, I'm Crypto Casey and welcome to another episode of Crypto This Week. Let's take a look at the global news stories and the state of the current macro environment. Please check out our sponsors, iTrustCapital, Ledger, and Malwarebytes. Invest in and trade cryptocurrencies tax-free with an individual retirement account, or IRA, with iTrustCapital. If you are not transferring crypto you would be upset losing off of exchanges to hold in cold storage hardware wallets, you are insane. Get a Ledger wallet today to safely secure and manage your crypto investments. And if you do not have malware protection on your computer, you are also insane. Get a free malware scan and malware removal using the link below with Malwarebytes, which also gives us a discount for their premium services. So make sure to scroll down and use the links below to the correct and official sites, as well as redeem any special offers they have for us. Cool. We are now a week and a half out from Jerome Powell revealing the Federal Reserve's decision about interest rates. And one of his colleagues, Fed's Waller, citing good news. Backs quarter-point increase at next meeting. U.S. Federal Reserve Governor Christopher Waller, one of the leading inflation hawks and an advocate last year of aggressive rate increases, supports scaling back to quarter-point rate hikes at the Fed's next meeting, all but cementing another step down in the pace of the central bank's monetary tightening. Nice. And in another headline this week, Fed to deliver 2 25 basis point hikes in Q1, followed by long pause. The U.S. Federal Reserve will end its tightening cycle after a 25 basis point hike at each of its next 2 policy meetings, and then likely hold interest rates steady for at least the rest of the year, according to most economists in a Reuters poll. Sweet. This path would provide some nice tailwind for Bitcoin and the crypto markets at large. However, as we discussed last week, it's possible that Powell is displeased with the rally after a relatively unremarkable CPI report and decides to calm us down with another 0.5% interest rate hike. Or there may be a more powerful force at play. Sure, we still have inflation year over year, but a more serious threat to the global economy is the Fed sending us into deflation. In fact, Elon Musk says deflation is already here. He used the analogy of driving a car on a windy road on the edge of a cliff, using only the rearview mirror for vision to reflect just how inaccurate the Fed's data is and how dangerous the ramifications are for the economy. Mr. Musk believes that if the Federal Reserve persists too far with its interest rate hikes, the broader economy and the stock market will pay a pretty dear price. Ultimately, our view is that inflation is quite likely under control, at least for now, and that this will become very evident in the upcoming CPI releases. As a result, we expect the federal funds rate to reach its peak at some point in the first half of 2023, and then, assuming the widely anticipated recession manifests this year, to pivot to cutting interest rates at some point in the second half of this year. Bullish. More tailwinds for Bitcoin this week as dollar dominance continues down a slippery slope. Saudi Arabia just said they are now open to the idea of trading in currencies besides the US dollar. Does this spell doom for the greenback? Saudi Arabia's finance minister, Mohammed Al-Jadaan, stunned reporters in Davos when he expressed that the oil-rich nation was open to trading in currencies besides the US dollar for the first time in 48 years. His comments are the latest signal that powerful nations across the world are plotting a de-dollarization of the global economy. Cool. So as the Federal Reserve has been putting countries off the dollar by bringing them to their knees with interest rate hikes, the US government is doing their fair share to further inspire deglobalization. As, this week, the US hit the debt ceiling. Here's what that means. The US government funds much of its spending through debt, which is issued by the Treasury. The current limit is $31.4 trillion. Raising this limit would allow the government to borrow more to cover spending already approved by Congress. Failure to raise the ceiling would mean the government would eventually fail to pay back its debts, including interest payments on Treasury bonds, technically putting the US government in default. So currently, Republicans in the House of Representatives say they will not agree to raise the debt limit unless the Biden administration agrees to cut spending, putting the debt ceiling in political limbo. However, any US default would result from a political decision rather than an economic imperative. Since the US debt is in dollars, we can pay it back by printing more dollars, says McMillan. Of course we can. What a racket. Back in 2011, when the US faced a similar crisis, it caused a downgrade in its credit rating, which caused a lot of market volatility. If it got to that point this time around in the midst of de-dollarization efforts around the world, it would not bode well for the longevity of the US dollar as the world's reserve currency. Bullish for Bitcoin, bearish for the US, and also bearish for government retirement accounts, as the Treasury taps retirement funds to avoid breaching US debt limit. Lame. So if you are a crypto investor and interested in opening your own retirement account that supports crypto investments, I personally use iTrustCapital. Using their services, you can trade crypto tax-free within a tax-sheltered retirement account, like a traditional or Roth IRA. I chose to invest my funds with iTrustCapital because they have the lowest transaction fees in the industry at 1%. Their monthly service fee is non-existent, 0, which is unheard of with retirement account services both traditionally as well as with other crypto retirement service providers. They recently rolled out new features that make them the first and only crypto retirement account service provider that supports DeFi functionality, allowing us to do cool things like accrue staking rewards, all tax-free or tax-deferred. Very neat stuff. So scroll down to the description area below to access iTrustCapital's correct and official site to open a retirement account today. Nice. So we've covered some tailwinds that should prove favorable to Bitcoin's trajectory going forward. Now let's go over some headwinds. Nightmare. Collapse of leading crypto lender traps investors. Savers who sought high returns via schemes run by Genesis and Gemini can no longer withdraw funds. Crypto lender Genesis files for bankruptcy in latest blow to Barry Silbert's DCG, or Digital Currency Group empire. And Gemini's Cameron Winklevoss threatens legal action against DCG CEO after Genesis bankruptcy filing. Very bearish. But it's just continued fallout of stories we've been discussing on the channel, and it's highly likely that the market sees the writing on the wall and has already priced in the fall of these particular crypto entities. Another developing story that will be a double-edged sword for crypto, both bullish and bearish, is the exponential rise of artificial intelligence that is in full swing. This week, AI avatars launch on Polygon as Character GPT brings NPCs to life. AI NFTs that can be trained to respond like real people are coming to Polygon. Interesting, yes. However, as crypto investors, we need to be mindful of what AI is capable of doing so we can protect our investments from scammers. Scammers will use AI to download videos of popular influencers in the space like Elon Musk, Cathie Wood, Meet Kevin, BitBoy, Guy at Coin Bureau, myself, and pretty much anyone, and use the images, audio, and chatbots to make and post convincing videos of us, have convincing conversations between an AI version of us with other people, all to try and trick you into sending them money, crypto, your private keys, seed phrases, login credentials, passwords, etc., all to steal from you. They will use AI to direct message you on social media, email you, have video chats with you, and similar, all about some special investment fund that guarantees profits they only reserve for specially selected people, etc., etc., and it's all 100% a scam. They will also pretend to offer you services to recover your crypto, help you set up wallets, and basically anything else where they will try to steal from you. So we need to watch out and be more vigilant than ever. So remember, never, ever, ever send your crypto, money, private keys, login credentials to anyone you have never personally and physically met who is offering to invest for you or help you with your wallet, private keys, or similar. Another AI headline from this week, ChatGPT is pretty good at writing malware. It turns out the trendy new chatbot has many skills, and one of them is writing polymorphic malware that will destroy your computer. Basically, this is malware that can cryptographically shapeshift its way around traditional security mechanisms, many of which are built to identify and detect malicious file signatures. So, scammers will also use AI to create malicious code to infect your computers, cell phones, and similar, create fake websites and fake exchanges to try and get you to submit information through. So be sure you are double and triple checking all websites and links you're accessing. All of the links to my only social media accounts are listed below. And please remember that I will never ever direct message you on them to avoid confusion due to so many scammers impersonating me out there. It's getting extremely crazy. But if we follow the simple rules of never ever sending money or crypto to me, scammers pretending to be me, or anyone else who asks you to send them crypto to either them directly or trying to direct you to some website to send it to for investing or any sort of help, don't do it. It's all absolutely 100% fake and scams. So be sure to spread the warning to all of your friends and family so we can all be mindful of what's going on and protect ourselves. Cool. Now let's wrap things up with another potential headwind with crypto regulations. The US Justice Department will announce a major international cryptocurrency enforcement action on Wednesday, it said in a statement, adding the US Treasury Department will also make an announcement. The US Department of the Treasury will also announce an action in this space, the statement said. Yeah, pretty scant on the details, but we will follow the story as it unfolds over the coming weeks to see how it affects us and the crypto space at large. Also, this week from the regulatory front, former SEC officials crypto warning, regulatory onslaught is just the beginning. Former Securities and Exchange Commission official John Reed Stark has warned the crypto industry of an escalating regulatory onslaught. Stark founded and served as chief of the SEC Office of Internet Enforcement for 11 years. He was also an SEC enforcement attorney for 15 years, where he led cyber-related projects, investigations, and enforcement actions. Stark explained in a tweet Thursday that the SEC hit BlockFi for failing to register its crypto lending program, stopped Coinbase from launching its crypto lending program, and just hit Gemini and Genesis for its Earn crypto lending grift. He warned, buckle up. An SEC regulatory onslaught is just the beginning. An ominous warning, but I'm still bullish overall for 2023. So if you would like to learn more about how the Bitcoin Strength Index or BSI indicator works, check out this video. If you would like to finally have that eureka moment about how cryptocurrency wallets, seed phrases, and private keys work, check out this video. And if you would like to open up a retirement account with iTrustCapital, click on the link here. Like and subscribe for more. Be safe out there.